Hi there again. This is Lord Tedders, and I'm going to be talking a little bit about how I trade the Euro-Dollar Forex. And I've got three charts up here this morning for the 89 tick chart, 15-minute chart, and hourly chart. And what we're going to talk a little bit about today is basically how I define a range and a breakout, and what types of things that I tend to look for once we've pushed up against the edge of that range or we've broken out of that range. So for my type of trading, my favored trades happen either at the extreme of the range or when a range has been broken. So how do you define where that range is? If you look at the hourly chart, you'll see first off, in the past week, we've had an uptrend, and it's been followed by a fairly significant retracement. So this gives me sort of my overall view of where the market is going and what's likely to happen from here. Typically, once you've made a retracement of this nature, you'll probably either move, further down to say this support level, or you'll bounce and begin to move up. So those are the probabilities for the morning, either up or down, which it always is. But at least it gives us an idea of where things are likely to stop. Of course, the market could continue past the support here, but it's likely to take a pause, and that's something that I focus in on, is where is the longer term market likely to take a pause, and that's usually where the short term profits are available. So from there, I look at the 15-minute chart, and basically what I'm looking at is my dynamic resistance and my dynamic support for the last several hours, which you can see the dynamic resistance is at around 33.07 and dynamic support around 32.59. So what I want to look for this morning is I'm going to look for any plays that push against the support and resistance, and then when they start pushing at support and resistance, I'm going to be looking at activity to see how serious that is. I view support and resistance kind of like a fence. You can push up it against a couple times, you might bounce back, but if you break through that fence, then completely different set of trade setups are likely to occur. Okay. I've advanced the chart about 15 minutes, and we're about 15 minutes before the New York Open. And you'll notice here on our 15-minute time frame, we've had a candle that has pushed support down just slightly past our former support area, which was at 32.60-ish. And you can see this on the 89 tick chart as well. Now, this is where a lot of folks get into trouble with trying to fade a range play, is they're not really looking at the overall context of the market and what's likely. If you go back and you look at the hour, you can see that we've done this stair step. Here's our first step here. We took a little pause, so we keep stair stepping down. The odds are that this first break of our support this morning is not likely to be a great place to reverse the market. In fact, what's most likely is that we will probably continue down at least another 30 or 40 pips before we take a break. And also, we don't really see the emotions on the chart in terms of the fact that you want to think in probabilities of, if you're going to reverse the market, then you want to think about the majority of the stops being up in this area. And at the moment, that's just not the case. What's happened is you probably had some folks playing this range, and they're the ones who are probably taking their initial stops. You might have a couple of eager bears ready to get back on the train, and there's just not a whole lot of high probability to fade the setup at this point. So this is where having a good idea of the context of the market is going to help you out in terms of whether to fade or play the break. Okay, so we've moved down from where we last had the market here. at about 5:15 or so, and we are now approaching the New York Open. Some interesting things have happened, though, and even if I had thought, well, maybe the market might move up from here and bounce, I'm getting a warning signal at this point that the market is going to probably break this fence. So if you look at the 15-minute here, you'll notice our previous 15-minute had pushed down, this next 15-minute had pushed down, and now we've had a little bit of a retracement. But you'll notice that our next setup, which is a classic setup for the lower lows and lower highs, is that where we're setting up here is below the breakout point. And this is a key factor for whether I'm going to play a retracement play or not. If we had pushed up and we're back in the middle of our range, I would not be considering this for a valid short. But because we've actually broken and stayed out of the previous support area, right at it, that seems to me that this is a good likely play for a short. So in fact, that's what we're going to do here. Start the market back up and see how it progresses. Advance the market just a little bit here. Okay, so we've got our valid entry, and you'll notice I don't have a fixed target at this point. I'm going to basically see where we get pushed to in terms of momentum. I do have about a 12 pip stop on at this point. This is primarily if we get to that point, we'll be back in our range, and I can consider my idea invalidated at that point. I'm going to advance the market here, get us going, and you can see that we're starting to push down and see if we can test the bottom of this newly formed support. Indeed, we do. And let's see here. Let's see how momentum's building. All right, we're kind of stalling out a little bit here. This is where I'm going to start thinking about taking profits. We've just pushed down to a new momentum low, and that's a nice 19 pip scalp right there. Again, we're just trying to take a bite out of the market. We're not attempting to catch every move. Okay,